till we get to the end. So just a little bit about the survey before we start. As most of you know, we produced an annual salary guide which shows typical salaries paid across a whole selection of industries and functional areas. It's cross-referenced for level of experience and the type of company that the role could be found in. And the salaries are based on what we see every day in the roles that we fill and from the candidates that we meet. And it's really become an invaluable reference tool for literally thousands of hiring managers across the country. We're really proud of it, and particularly proud of just its simplicity and its user-friendliness. If you haven't received a copy of the 2015 guide yet, you can just go to hayes.ca and you can easily request a copy there. In addition to the actual salary guide, we also take the opportunity to survey our clients about their hiring plans, what they're planning on doing with salaries for the coming year, their business activity forecasts, and then their general confidence in the economy. This year the survey was completed by 4,000 hiring managers, HR professionals and business leaders across the country, across a whole range of industries. This year we've included 4 years of data to show trends in the job market, and that really puts us in a position to be able to see things that not everybody can, and it allows us to be able to provide really valuable advice and recommendations to our clients. So today's webinar is specifically about the accounting and finance sector. So we've pulled out the responses from people working within that sector. So what I'm going to share with you now is based on approximately 1,000 hiring managers, all working in accounting and finance departments across 16 different industries all across Canada. So all of the statistics we're going to share are based on respondents or responses from those particular people. So I'll just start out with the headlines as from the results. First one, corporate Canada's confidence in the economy is at an all-time high, and I'll show you the trends in a moment. Business activity forecasts have reached a new level of optimism, but that's not converting into a more aggressive hiring plans. The majority of employers are taking a continued and conservative approach to salary increases, which I'll show you in detail. And finally, and interestingly, what we've discovered is employers may actually hold the cards to addressing the skills shortage themselves. So I will touch on all of these points over the next 20 minutes or so.
Can you reshare your screen?
It's not sharing.
Somebody clicked off. If you go, keep talking, just reshare your screen.
Okay, somebody just told me there I wasn't sharing the screen suddenly. Okay. Right, so we start with the market outlook then. So we asked in the survey how you felt about the economy for the coming year and whether you felt that it would strengthen, weaken, or remain the same. And for the first time in 4 years, we see that there's actually more people. Now, it's a very slim margin, so it's pretty much exactly the same, believing that the economy will strengthen as opposed to the more conservative view of it remaining the same. The most encouraging thing really is to see the movement in confidence over the last 4 years, and it's moving from 30% up to 50% believing that things would improve in the coming year, and that's got to be good news. As we know, Canada continues to be really influenced by the US economy, and it's all good news coming out of the US economy over the last while, so that's got to be a positive influence. And obviously there's other major markets around the world that are strengthening as well. The only wrinkle right now really is the price of a barrel of oil, and that may affect business confidence. The survey was actually conducted when the barrel was still priced at around $60. However, having said that, in most of the key markets that we operate in here in Canada, it doesn't mean any indication that that is actually materially affecting confidence just yet, but I suppose we will wait and see what happens. So how about what's happening with business activity levels amongst employers? 70% are expecting business activity levels to increase in 2015, which is a new all-time high. But that's actually despite the fact that there were less people reporting an actual increase in 2014 than there was in 2013. You can see there the solid blue line is companies reporting an actual increase in that particular year, and you can see it's moved down from high 60s in 2013 down to probably 58, 59% in 2014. but as I said at the start, we're up to a new all-time high of expectation, a proportion of companies expecting there to be an increase in business activity for 2015. So only time will tell. We'll see how the year pans out. Then if we look at it by region, it's evenly split across the provinces, no major difference between them. The national average is 71%, expecting to see business activity levels increase, and then varying 69 in Ontario, 72 in Alberta, 74 in BC. So all pretty good stuff there, no major difference. So then if we look at recruitment, we'll see how all of this is actually affecting hiring plans. So this year we have around 55% of employers saying that they're going to hold headcount steady compared to 45% doing that in 2014. So a far more conservative outlook from employers on hiring plans coming into 2015 within accounting and finance. And then the other point to highlight here is that generally speaking we find that people are more optimistic than is actually justified on reflection. So perhaps in 2015, instead of there being 10% that would predict there's going to be a decrease in permanent headcount, it may turn out to be 20% or more if it's anything like has happened in previous years. Generally, I think people are optimistic and they don't hope for or expect decreases, and that makes sense. But it does throw up the question about, are hiring plans actually enough to support the growth plan? So you have 74% of companies expecting business activity levels to increase, but then you've got over 50% of companies saying they're planning on keeping their headcount steady. So you would wonder, is one going to be able to support the other? Then again, if we look at it regionally, see what the difference here is. I think the interesting thing on this is that despite the fact that expectations for business activity levels to increase were pretty consistent across all the provinces, there's a marked difference when it comes to hiring plans in Alberta. So obviously Alberta are feeling far more confident. You can see Alberta saying 44% of employers there saying they're planning on increasing permanent headcount compared to only 30% or 31% in Ontario and BC respectively. Why would that be? Well, I think it's just to do with how long there's been confidence. So in Alberta's economy, as you all know, it's been growing strongly for some time now, and employers there have been increasing permanent headcount to keep up with that growth over the last number of years. Elsewhere in Canada, I think the expectation of growth is not something that we've been dealing with, or actual real growth is something that we haven't been dealing with for year after year, and as such, the expectation hasn't really converted into more aggressive hiring plans just yet. So perhaps that will happen next year. Then looking at temporary hiring, and really this looks like things are going to remain the same as the previous year. Most companies, 75%, they're going to hold their temporary or their contract headcount steady. But we could see a spike, I think, in the usage of temp or contract staff because of the expected business growth. So if business activity levels do come through at the level that everyone's expecting, and if companies do hold out on hiring permanent staff, perhaps we'll see an unexpected spike in the use of temporary staff over 2015. Okay, let's just have a quick look at which skills are most in demand in the accounting and finance sector. And the first point I'd like to make here is just that accounting and finance professionals are very much affected by changes within the industry in which they specialize. So for example, we see a demand for professionals with experience specifically in the construction industry, or we see an extreme demand really for accountants who are actually experienced property accountants, and that's right across the country. So largely the skill sets can be dictated by the health of the industry that the accountant is actually working in. We also see a demand across the board for roles that add a new level of efficiency to an organization, or roles that can ultimately reduce costs or improve cash flow. Something that we've seen a lot of in the last year, and we would expect it to continue into 2015, is a demand for experienced payroll professionals, and that's across Canada. And in particular, where you see companies starting to embrace international markets, or they're involved in joint ventures, or even across provinces, it adds a different level of complexity to the payroll, and hence there's a real demand for people who have that kind of experience. The other one that we've noticed is accounts receivable professionals. They seem to be in serious demand all of the time as organizations focus on improving their own margins and trying to bring in monies that are outstanding from their own accounts receivable. High levels of turnover in audit and tax professionals, that's continued to drive demand of those skill sets. You know, if people seem to more freely move on and look for experience in other areas, which means there's an ongoing demand, not so much to do with the fact that it's growing, but to do with that it's churn of people entering the industry and then, or entering that sector and then leaving that sector, and with a lot fewer junior employees actually choosing those areas of audit and tax as the area that they actually want to practice in. Beyond that, and this would apply for, I suppose, all roles within finance, particularly at the senior level, I think, the senior level professionals, they're really and increasingly expected to be strategic planners and to be leaders of people and leaders of teams with experience beyond just the traditional number crunching for an accountant. So if that sounds like you have that strategic planning ability, leadership skill set, in addition to your technical skills as an accountant, then you are most likely to be in high demand, but you already know that. Just to look at then how this is converting into actual challenges that companies are facing or hiring managers are facing. We all know that when recruitment's difficult, typically it revolves around just the lack of good candidates, and then you've got the corresponding rising salaries. But we wanted to see what employers are actually concerned about below that level. So we asked this question last year too, and we can compare the results with this year. So after the usual issues of the skill shortage and salary levels, you've got around 50% of employers starting to think about their employer brand and their company reputation. And I don't mean here that the issue is actually like a negative connotation with a company's reputation, but more so to do with whether the candidate pool is even aware of what the company's reputation actually is. And I think a challenge for employers today is just getting your voice heard among so much noise, and not just noise in the recruitment market, but just it's competing with all of the noise online and in advertising and in the media that you see every day. And interestingly, you can see the movement from 2014 to 2015 that people, employers or hiring managers, recruitment professionals internally in organizations are becoming more conscious of these challenges to develop your own employer brand. We asked how long it was taking to actually fill roles that are deemed candidate short, and we were comparing it also with roles that are not deemed candidate short. But if I focus on the candidate short part, you can see there that the majority of employers are saying it's taking in the region of between 2 and 6 months to fill a role where there's a candidate shortage. And then the most difficult level of role to fill is identified as senior management roles. The time it's actually taking then to recruit some of these positions can have a real knock-on effect for an organization in terms of cost and in the affected productivity of the business. You know, you may need to bring in contractors while you're waiting to try and fill the position for 6 months, or a project could even be put on hold. If it's a senior management position, it may depend on actually making that hire. So there's a real practical challenge or a practical problem that can come out as a result of not being able to find that individual. We asked what were the main reasons that a new hire doesn't work out, and not surprisingly, the top two were lack of skills matched to the role and then just a lack of personality fit. Bearing in mind how difficult it can actually be to find a candidate in the first place and how long you have to look to actually find them, as we've just said, getting that decision right at hiring time is essential, as we all know. We always advise our clients to try and articulate in as much detail as possible what it is that they're really looking for in a candidate, and then to take it another step is to challenge themselves as to how accurate that really is. Are the things that you're listing absolute essentials, or are the things that are just nice to have that you may or may not want? And bringing that out, articulating it, and getting the various stakeholders in the process to agree on what that is an essential part. And of course, once you've got that done, then you need to be able to show the discipline to actually stick to it. And a policy we always use and we share with our clients is if you're interviewing a candidate and there's some doubt about that candidate, then in my mind there's no doubt and you should not hire that person because it will not work out. We asked what factors were hindering the success of an organization's recruitment strategy, and you've got the usual problem in there of there just not being enough good applicants. But if you look at the next issue, it's the fact that they're looking for very niche skill sets, and that's becoming more and more common. It's the question of how do you access the niche skill sets where there's a relatively small number of people with that skill set. And then further down you start to see things like the cost of posting ads, too many job boards to choose from. We asked about people's feelings towards social media, and 77% said that they were concerned that how social media could have a negative impact on people's perception of their own brand, and that makes total sense. I think that's par for the course when you're dealing with social media as a business, that you're putting yourself out there and people can say whatever they want to say about your organization, and that can be a little bit unsettling. And I thought very interestingly, 64% said that they were concerned with how social media channels will negatively affect their ability to recruit. Now, whether that's because they're concerned about the potential negative comments they may get about their brand, or whether it's just the complication of actually using social media, and because there's new social media channels coming along all of the time, it is actually a very complicated thing to manage, but it's interesting. I think there's an acceptance of the need to use social media in recruitment, but there's also a real sense of fear there about how social media is actually going to affect your ability to hire, and it's a conundrum for employers. Okay, so I'm going to talk a little bit about the skill shortage here, as it is something that can and is having a real and quite a negative effect on companies. So we asked whether Canada suffers from a skill shortage. 47% believe that that is to be true, but then we asked whether your own industry is affected by a skill shortage, and 87% believe that to be the case. We asked what you think are the main reasons contributing to the skill shortage in your industry, and by far and away the biggest reason was just a lack of training and professional development, followed by a lack of people actually entering the industry. We then asked what's actually being done in your organization to address the skill shortage, and only 30% said that they were actually committing to training and development within their own organization. And then you've got the same proportion, about, sorry, it was 39% said 30% said they were committed to implementing training and professional development within their organization. And then you had about the same proportion said that they were dealing with the issue by combining roles and creating hybrid roles. And I think as an idea, combining roles is a good solution, and it does create greater efficiencies, but also puts a lot of pressure onto the individual, and of course it also requires a need for more additional training for that individual. We asked what impact the skill shortage is actually having on your business. It's a significant one, but perhaps it isn't that surprising, is that it's affecting a company's business activity levels directly. We asked what elements of business activity it was affecting, and half said that it was actually affecting the company's productivity. We also asked how specifically it has actually affected productivity, and you've got a third or more citing things like it's creating increased stress leaves within the organization, that it's lowering morale, or just causing general inefficiencies. One of the issues obviously with stress and lower morale is that in turn that could cause a knock-on effect and actually damaging your ability to retain good people. I think the point here is that companies are trying to do more with the same number of people. You can see business activity is predicted to increase, and you have the vast majority holding out with the same number of people, and that is obviously a move towards improved productivity, better profitability. But doing more every year with the same number of people, it's an attractive business case, but it does come with a health warning. You know, your plans to keep up with your expectations could be impeded by not being able to attract the right people into your organization, or worse, actually losing some of your own very valuable people. Okay, we asked, what are you doing to actually address productivity issues if you're not adding permanent staff numbers? A quick and highly effective fix is the use of temporary staff. So temporary staff as a percentage of workforce in Canada is at its highest level ever right now. However, a sustainable business requires development and promotion of staff, and that means effective succession planning. As I said earlier, or as we've said before, only 30% of employers actually have a succession plan in place. And when you think about the long-term issue here, that means the vast majority of companies are taking a short-term view on dealing with what is really a long-term problem. Another very interesting insight is that employers actually believe that resolving the skill shortage is actually in their own hands. 53% says the responsibility for resolving the skills shortage is actually their own. In other words, if companies themselves were taking a longer-term view and spending time bringing in entry-level people, providing robust professional training and development with their own organisations, in time the skills shortage would alleviate. But of course, it's hard to take a long-term view when you've got short-term pressures to deal with. Or, as one employer said to me, well, why would I do that? Because over a longer period of time, I can train these people up and develop them, and then they may leave and just go and work with one of my competitors, which is a fair enough point, actually, when you put it like that. Okay, what effect is this having then on salary levels? The majority of employers are planning a less than 3% increase in 2015, so very similar to last year and to the year before. The only place really we're seeing a little bit of movement here is less people offering the 3 to 6% increase and a slight increase in people offering 6 to 10%. You know, there's not much in it, but our guess is that that's probably driven by a small proportion of companies that are struggling with an acute skill shortage in a niche area. For example, like the property accountants that I was saying earlier, which seem to be virtually impossible to find enough of, and salary levels or more aggressive salary increases always follow whenever there's an extreme shortage of people like that. Then looking at it regionally, provincial breakdown, we've got 44% of employers in Alberta going for the 3 to 6%, compared to only 27% and 22% in Ontario and BC respectively. In Ontario and BC, the less than 3% increase seems like the plan for at least half of the employers. Okay, so with a pretty conservative approach to salary levels, despite business activity levels increasing and a reported shortage of certain skill sets, we wanted to see where there was wage pressure starting to build. So we asked respondents to answer whether they were feeling wage pressure by seniority level. The areas where there's the most wage pressure would appear to be at the mid-level to senior management levels, with around 65% of employers saying they're experiencing wage pressure for those kinds of roles. At the junior end, not so much, at only around 30% of employers saying it's an issue. We asked if your organisation offers competitive salaries. 49% said their company doesn't, or at least are unsure if they do. We asked what was the #1 reason that a candidate turns down a job offer, and 57% said it was because the salary was too low. So just to summarise that, we've got the vast majority of companies holding steady with a less than 3% salary increase for 2015. We've got 65% of companies saying that they're feeling wage pressure at the management level, and around half feeling some sensitivity towards the salaries that their own organisation are offering to new employers. So there is some pressure in there, and some awareness that salary levels will have to increase if the business activity levels actually come through in the way people are expecting. Okay, a quick look at benefits then. We asked what are the biggest influencing factors when it comes to benefits on recruitment and retention. Vacation tops the chart of benefits, which I'm going to come back to in a moment, but career growth or career progression comes in at second place, but only 35% of companies, as I said, have got a succession plan. So there's a real big opportunity there for employers, and it doesn't really cost anything. You know, as we say to our clients, think of how impactful it would be to be able to show a new hire into the company the succession plan, and to be able to show them where they could fit in and where they could be in 5 years' time. And obviously the same goes for the existing staff in the organisation. We want the organisation to look like this in 5 years' time. This is what the structure is going to be, and here's where you could potentially fit in. And to be able to be there in 5 years' time, here's what we need you to do in the coming year to get off on the right path. And that takes some time and it takes some work, but it doesn't cost anything. And our belief is that would have a huge effect on companies' ability to be able to recruit and to retain key members of staff. The other point I just said here on vacation. Vacation came in as the most influential benefit on recruitment and retention. And we asked respondents as well, we said, what are you planning on doing to improve your benefits? And one of the most popular improvements for benefits in the coming year is actually improving flexible work options, so such as flexible work hours or ability to work from home, and they're planning on doing that for 2015. But as you can see, those factors actually rank lower in the pecking order. So despite the fact that vacation is such a big influencer for employees, only 16% of employers are actually giving that any consideration. So that, again, it could be a big opportunity for you as an employer to gain a competitive advantage when you're out recruiting and obviously holding on to your staff. So, almost finished. I'll just finish out with some a summary of key findings and also some recommendations. So, on the key findings, confidence in the economy, optimism for future business activity levels is at a 4-year high, but that's not converting into more aggressive hiring plans yet, as companies are hoping for improved productivity. That's placing more pressure onto existing staff. Skill shortages in specific areas are still clearly present, and that seems set to accelerate. The majority of employers continue to increase salaries by less than 3% annually, with the exception of ALBERTA. And then most employers would appear to be taking a short-term view on solving the skill shortage in their business, at the same time that they will say that actually solving it is their own responsibility. Whether they can actually do that or not is another thing. Just a couple of recommendations from Hayes on what you should do with this information. The first is to stress the importance of actually trying to build a talent pipeline for today, but more importantly for tomorrow. And that's through a long-term succession plan to be able to meet these business forecasts. We can't continue on with not investing in the long-term development of people. Secondly, hiring temporary contract staff will alleviate the pressure on the current workforce and reduce the likelihood of turning over people that you want to hold on to, and obviously supporting the growth plans. Start thinking about selling your employer brand with a well-thought-out digital recruitment strategy, and an EVP is an employer value proposition. So our message here is, you know, where you're fighting to try and get your voice heard, you need to have a plan, and the beginning of that plan should be defining how you're selling your organization, how you're differentiating your organization, and then the second part is how do you get that message out and starting to come to terms with the use of social media in broadcasting that message to the right audience. When it comes to compensation and offers, we always say, you know, you've got to be competitive, because if you're way off the market rate, then you really will struggle in hiring new people. But there's only one company that's actually paying the highest salary, so you don't have to be that guy. And you've got to think beyond just the salary with your job offer and the use of performance-related bonuses. People are willing to take some risk in their compensation package when there's the potential opportunity to earn more. So using performance-related bonuses to supplement salaries goes a long way, and just generally using incentives makes a big difference too. And finally, evaluate your existing workforce on their potential. As part of a strong succession plan, you should be offering training development and looking to try and upskill junior to mid-level people in your company so that there's less pressure and stress on the organization over the next couple of years when you're going to need these guys. Okay, so that's the end of the key messages that we wanted to share today. Thank you very much for dialing in. Sorry about the confusion at the start where you lost some of the slides I was looking at, but I think we got most of the message across. So I hope you found it useful and that you got at least one or two constructive ideas from it. We've now got a couple of minutes to spare to answer any questions that you might have. As I said, you can just type them into the chat box and I can see them as they come up. We've got a couple of people on the call. As I said, we've Anthony McElwee in Calgary and Slane Susie in Ottawa who are going to be able to help us. So as we're just waiting for some questions, if you want to request a copy of the salary guide, you can go to hayes.ca. I believe it's hayes.ca/salary guide. And as I said at the start, it's available. You can request it, and we will deliver a copy to you in no time at all. Okay, so we'll see what questions we have. We'll just give it a second. Okay, there's a question here. So, why do you think employers are becoming more concerned about having an employer brand? How much does this matter? Well, I think it matters a lot, actually. So we did a survey about a year ago now called "What People Want," and we were looking at when people are trying to evaluate a job offer, how much weighting do they give to salary versus the weighting that they would give to benefits, to career growth opportunity, to the reputation of the organisation. And we found that salary does trump everything. It's definitely given the most weight. But then there are other things that are very important as well. And company reputation is actually a very, very important thing. The challenge companies have now, of course, is trying to, how do they broadcast their reputation with there being so much competition and communication out there. So I think, just as I said earlier, being clear as to what it is, how would you articulate your employer brand, and then getting it out there is an essential thing. You know, when we talk about digital recruitment and talk about the use of technology, it is actually changing how people are going out to look for a job. You could say actually people are hoping that a job is going to come and find them now. But people consume the information so quickly. They're more able or more there's more ability to be able to share information about organisations, good and bad, that you really you need to be able to start investing time into building your own reputation. Because if you don't, you'll either have none, or potentially you could have some negative comments out there. Okay, we'll see. Is there anything else? There's another question here. So it says, how do hiring plans for finance professionals compare to other professionals? How do hiring plans for accounting professionals stack up against others? It's about the same, actually. It's slightly below the national average. What we've seen is the one that's probably the most aggressive is the construction industry, where there's far more hiring going on there, and companies are far more aggressive about it. But even if you look at accounting and finance, 1/3 of companies are still planning on increasing, or 1/3 of hiring managers are planning on increasing their numbers. So there's still quite a lot of action out there. And even if you think about maintaining staff numbers at the same level requires a certain amount of recruitment as well. So our view is that the last couple of years have been pretty good, like not amazing, but pretty good for an accounting and finance professional, and we would expect that 2015 is going to be pretty much the same. So we'll see what happens. You know, as I said, the only concern really is the price of the barrel of oil. Somebody's asked, were you able to get a copy of today's presentation? Actually, yes. So we've recorded the presentation, and we're going to post it on YouTube. So it will be up there as soon as we finish the call. So you'll be able to see all of the slides. And if you want to, you can listen to the commentary, or you can just turn me off and look at the slides on your own. So I think that's it. I don't have any other questions. Right, so that's it. Thank you very much for joining us today. Thanks to everybody who contributed to this work, and to everybody who responded to the survey and who organised the presentation for us. If you have any questions for me, just drop me an email. I'd be happy to help. It's rowan.o'grady@hayes.com, or contact any of your Hayes offices. So thank you very much for your time, and best of luck for 2015.